Hi and welcome back to the Cheeky Crypto Podcast. My name's Chris and it's fantastic to have you back with us for another podcast video. I feel a little bit better today. Yesterday was a very long day. It got to the end of the day. I recorded the podcast, but I kind of felt a little bit lackluster. Can't talk. Maybe it isn't any better than yesterday. I don't know. Let me know in the comments below. But we've got a lot of stuff to cover off. I think in the previous podcast we talked about Evergrande. Told you I can't talk today. And I did touch on Binance also, impacting the business. But I'm going to go into a little bit more detail on that. If you enjoy this sort of content, mash up that like button both on Twitter and YouTube. If you're watching on YouTube, subscribe, tap that bell, select all the notifications so you never miss a video, and give this a share. Whether you're watching on YouTube or Twitter, give it a share. We really do appreciate it. It supports the channel and it helps us, push out more content. And I'm hoping to have some really big announcements over the next, week or so. Particularly some really exciting stuff for UK crypto. So look, let's get down to the desktop and get straight into this. Okay, so we're going to start here on the CoinMarketCap website. The total market cap of all crypto globally is $1.06 trillion. It's actually up 0.36% in the last 24 hours. Bit of a bounce from pulling back like it did massively the other day, as we're all aware. Bitcoin is actually at 26,087.07. Again down 0.20% at the time of recording. We did get down into the $24,000 to $25,000 range for Bitcoin, and we have been calling those lower prices. And it comes as no surprise that the likes of Evergrande is one of the reasons, because this is one of the things that I've been shouting from the rooftop when it comes to expecting an impact on the market, right? Both crypto and stocks. So I'm sat here surprised, scratching my head that people are shocked. But at the same time, these events, they happen. Nobody knows exactly when they're going to happen, but we have been talking about it pretty much all year. We've been talking about property, particularly commercial property, talking about the issues that are there and the potential that it could have on this market. I think this is another prediction that we've been very accurate on, and I think we have seen over the last few days the impact of that. But I don't think that it's over. I want to be really clear about this. The macro still doesn't look good. We're seeing 60% of US residents now paycheck to paycheck. 60%, maybe people think that's lower than what was visualized, I guess, in people's minds. But that with record high credit issues or loans or debt is probably the best word when it comes to people all around the world, right? Things are starting to get very, very challenging. We're also hearing rumors of another virus variant, and there is now talk of lockdowns and stuff like that. Murmurs anyway. So look, we've got to be mindful about all of this stuff. That would be very convenient for the the Biden camp that are looking to obviously get re-elected. If they end up closing things down, will there be anything like this happen again, where money is printed? Could be really interesting, could be really good for crypto, really bad for humanity. But look, I don't want to get into the politics aspect of things, but sometimes you have to kind of touch on it, because we're trying to let everybody know what's going on as we see it, and trying to, I guess, ring those alarm bells in advance. And I think we've done this terrifically well throughout this bear market. I think we highlighted the likes of FTX before it happened. We called both the new lower lows. We called those very accurately. We also called out projects that were worth shorting around November 10th. Again, before FTX had actually collapsed, we were highlighting Solana, FTT as potential shorts and other assets associated with Alameda Research. We've highlighted the likes of BlockFi before anybody else, and various other exchanges that were struggling, right? So I think we've had our fingers on the pulse. I think people that have been part of our community, that have been listening and watching the content, have been kept up to date and given a really good outline of what to expect. So I'm hoping that doesn't change. Obviously, the markets are moving at a rapid pace, and things can change. This is why it's really important to be alert and watching and keeping up to date with all the latest news. Jump into the Discord, follow us on Twitter, and we try our best to keep you up to date on all the future movements of the space. We try to do this ahead of time, trying to keep people safe. And, the real goal for us is to support people build generational level wealth, get out of that 9 to 5 that rat race that you hate. And, look, if we're successful with doing that ourselves, I think that, our audience can be successful with it also. But you do have to be switched on, and that is the point that I'm trying to poorly articulate. If you switch off, disappear, go on holidays, all that sort of stuff, then the chances are you're going to miss something really big, really important. But let's move on. We've got UK to put magnifying glass on crypto transfers. This is coming from the FCA, the financial regulator here in the UK. They are making a lot of changes. In one hand, the government saying they want it to be a crypto hub. In another, hand, from the regulator, they're putting in some very challenging and questionable policies. Particularly around advertising is something that we're going to see an awful lot of crypto firms leave the UK, and I think that's a real shame. We're one of those companies that may leave the UK because things are just not clear enough, and there's other regions in the world that are far more crypto friendly. So you're going to see an awful lot of influencers and crypto companies move, I believe. I think we're seeing this a lot out of the US, and unfortunately we're probably going to see it out of the UK as well. I really hope that they revert back. There are crypto lobbyists trying to explain the issues that some of the things that they're doing will have on crypto businesses within the UK. But what I would also say is they are doing some fantastic work as well, and I think this is one of the headlines that I really wanted to cover off, because I don't think it's all bad with the FCA. I don't think that they are necessarily doing this deliberately because they don't want crypto to be successful. I think it's coming from a good place. I just, as I mentioned in the lead up to, regulations for cryptocurrency being an actual thing, I have been saying that I don't think that the regulators are going to get it right, or the governments are going to get it right first time round. And I think that is what we're seeing here with the FCA and, potentially other regulators and governments around the world. But, treating crypto assets as they do with traditional finance, I think is a positive thing, and I think that's really what the FCA is trying to do and where they're trying to get to. So yeah, look, I think we need to be keeping an eye on it. We need to be mindful that it can have a negative effect as well. We've seen Bitcoin hit its 2-month low as the crypto and stock market sell-off continues. Again, Nick and myself have been highlighting that we might see a little bit of a bounce. We're going to see how the weekend goes. We're not really going to do any trading this weekend. It's a little bit risky to do so. We'll see what happens on Monday, and we'll be evaluating the markets. And, we might see a little bit of a bounce, but we are expecting, further downside. And I think we need to be really clear on this. It's really important that, people are aware what's going on. I want to just touch on one thing that a lot of people aren't associating with this pullback, and that is that Binance is shutting down crypto payment service amid refocus on core products. And this is definitely going to be one of those things that has an impact. And there is also a war going on against Binance from the US, from certain governments around the world. And they are trying to, potentially get them liquidated and stuff on loans. So I just want to be really clear what's going on, and I don't think that it will be the end of Binance, but I do think that there is this agenda against them, and it all stems from the FTX saga. It all stems from the fact that there was a real magnifying glass put over the regulators and the government over in the US, and it kind of seems like it's Binance that are the ones that caused it in their eyes. And I think that's the wrong way to look at it. I think we actually called it before the Binance CEO, so maybe the microscope should have been on Nick and myself, and there were one or two other people that were highlighting it as well. The SEC, if I can talk, moves to appeal Ripple's ruling that XRP token is not a security. To be honest, I think this is just one of those things that was always going to happen. The regulator said imminent appeal needed because of other cases. Judge differed on whether crypto is subject to the SCA regulation. So really interesting. There is a battle going on when it comes to this lawsuit with Ripple, but I think that Ripple will do the same as what the SEC did. The SEC used really underhanded tactics to slow down the course of the actual lawsuit, and I think that they might regret doing that now, because I believe that Ripple will do the same to them if there is an appeal. I do think it's going to be a long drawn out appeal, and it's going to be mainly because of how the SEC treated Ripple during the lawsuit. And I think that what goes around comes around, and I think that it's all positive for Ripple, because I think they're going to have the clarity at the end when the decision's there. But I think in the meantime they're also having the clarity that it's not a security, and they're going to have that throughout the next bull run, I feel. Trump owns even more crypto than first known, new documents show. Apparently holds about 2.8 million in ETH, and this is a lot to do with his NFT project, which earned him 4.87 million in licensing fees from his non-fungible token collection per the filing. So really positive stuff. Let me know what you think about that. We got 2024 could be very bullish for crypto, and here's why. An article here from Cointelegraph. I think it's pretty obvious why. Everybody's going with the same narrative, and that is the narrative of the halving being the catalyst for the next bull run. So look, I think it's interesting. I think that it's great that people believe this. I think that it is going to have less and less impact on Bitcoin and the market. But whilst it gets all this attention, maybe I'm wrong. Time will tell. I hope you enjoyed today's video. If you did, mash up that like button. Subscribe if you haven't subscribed already. Tapping that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.